Hi everyone, this is Carmen Huertas and I'm reporting from Freedomtax Accounting, and we're here once again with another informative video. This time we're going to touch base upon the employee retention credit. It's another option out there for everybody that's looking for some type of relief. And we're going to attempt to explain it to you in layman's terms because all of these things can be super confusing, and I would benefit to hear it from somebody else who already kind of digested it and read it and put it all together. So we're going to attempt to make it easier for you to understand what this credit is all about, how to obtain it, and how it could benefit you and if you qualify to receive it. We're going to be discussing Form 7200, which is the form that we utilize to obtain this credit. Okay, so without further ado, we'll just go ahead and start this video. If you have any questions, feel free to leave the comments below, and we will, take a look at all the comments and answer. And if you have any questions, of course, you are welcome to call us, and our contact information will show up shortly here on the screen. Okay, so how to fill out Form 7200. We have today's date, May 19th, 2020. We always put dates on our videos because the information is honestly ever changing, and it gets updated, it gets revised, and this is the information that we have as of now, May 19th, 2020, when this video is being recorded. Okay, so we are part of Freedom Group. In case you didn't know, Freedom Group is a group with 4 different branches that serve the community in a variety of different ways. We have CPA, we have EAs here, we have financial advisors, we have insurance agents, immigration lawyer, and real estate professionals that can help the community in a number of different areas, with over 20 years of experience here in this community. So if you need anything, feel free to give us a call. Our contact information is at the bottom of the screen. All right, so here we go. Employee retention credit. I hope you have a pen or a pencil and paper and just follow along as best as you can. Okay, so this employee retention credit rather, this was part of the CARES Act, okay, and this became effective. They actually decided upon it during the second quarter, but it's active as of March 13th forward to the end of 2020, okay, and it's designed to encourage businesses to keep people on payroll. Quite honestly, they're trying to alleviate the burden on people going and collecting unemployment. So this is a way that employees can be helped by keeping the people that work in their company on the payroll, okay? And of course, it's difficult in times when not enough revenue is coming in. So these credits are designed to give you that relief and to have the business owner be able to keep the people on payroll, okay? The refundable tax credit, okay, this is a refundable tax credit, that is key, is 50% of up to $10,000 in qualified wages paid by eligible employers, okay? Don't get scared. We're going to break this down and explain to you what all this means. Qualifies to wages paid, like I said, after March 12th, 2020 and before January 1st, 2021. So basically from March 13th on, so the first quarter, it would have March 13th to March 31st, and that's part of the first quarter. And second quarter full, third quarter full, fourth quarter full, and then it ends at the end of the year, December 31st. And it covers that whole period, which is great. All right. Now, who is an eligible employer? There's 2 tests, okay? And these 2 tests, we're going to apply them to anybody who has a private sector business, any tax exempt organization. As long as you are not an entity that works for the government, basically, you can go ahead and participate in this credit. Also, the other qualifying term is, did you carry on a trade or business during the calendar year of 2020? If you weren't in business, well, obviously this wouldn't really pertain to you, but if you are in business, this pertains to you. Okay, so the 2 tests that we're going to look at is, if your operations were either fully or partially suspended due to any government order related to COVID-19. Okay, so some businesses are completely shut down. Some businesses are running at half of their operation, like for example, restaurants, okay? Restaurants are still doing a lot of takeout. Their dining rooms are closed, but they're still cooking, they're still providing food, and they are partially shut down. And it's not because they want to, it's because of the government order that has been issued everywhere in the 50 states that you may be watching from, okay? And the other test is, say you were not shut down. For example, accounting. Here in our offices, we're an essential business, so we have been open. So that test doesn't apply to us. However, the second one is, did you experience a significant decline in your gross receipts during the calendar quarter? Okay, and this is, we look at every quarter to determine, are you eligible? Okay, so at the beginning of every quarter, if your wages or your gross receipts rather, were 50% less than that same period the prior year, then you get to take advantage of this credit. All right? So more explanation. Trade or business partially suspended, just to touch a little bit more upon this. When the appropriate governmental authority imposes any kind of restriction on the employer's operation by limiting commerce, travel, or group meetings, we all know all of these things were limited. So that will definitely affect businesses, and that is included in the definition of trade or business partially suspended or fully suspended. Typically, the employer can still continue operating, like I said in the case of restaurants, but not all of its typical operations. Okay. As far as the significant decline in gross receipts, well, significant, that's subjective. They've put a number to measure this decline in gross receipts. It says that it begins with the first calendar quarter in 2020, in which the employer's gross receipts, so the money that came in from your sales, are less than 50% of that same period in 2019. So if you look at January through March of 2019 and compare it to your revenue in January through March of 2020, if you're 50% less, even if you were not fully or partially shut down, you get to take advantage of this credit, okay? And it ends when the gross receipts are greater than 80% of that same period in the prior year, okay? And if you continue to be within these numbers, it officially ends at December 31st. So January 1st, 2021, you can no longer take the credit, okay? So it does cover you through the end of the year if you fall within these parameters. How much is the max credit? How much can this really help you? Okay, so the ERC, which is abbreviation for Employee Retention Credit, it equals 50% of qualified wages, which includes the qualified health plan expenses that any eligible employer pays in any calendar quarter. Okay, so that helps. The maximum amount that you can take is over any particular individual. It covers them up to $10,000 in wages for all 4 quarters of that year. Okay, so the max you can take for one individual is a $5,000 credit. $5,000 is 50% of $10,000 in qualified wages that year. Okay, so once maybe one person met that in a quarter, so that person no longer counts, but then all your other employees continue to count, and you make the calculation based on that. All right. Okay, so what are qualified wages? Compensation paid by eligible employers to some or all employees after March 12th of 2020 and before January 1st of 2021. And remember that this includes the health plan, okay? The employer paid qualified health plan. And there's another loophole that you jump into to determine how you apply this credit. Okay, so first, just to recap, we know that if you were fully or partially suspended, you can take this, or if your gross receipts were 50% less as compared to the same period in the prior year, okay? Now, within that, say, okay, we got it, we qualify based on one of those 2 tests. Then we got to look and see how many employees we're talking about. Any employer that has more than 100 full-time equivalent employees in 2019, the credit applies to wages paid to people that were not working. So if you were partially suspended and some people just couldn't work, they were at home, right? But you want to keep them on payroll, those people are the ones that count. If the employer had over 100 employees in 2019, okay? So over 100 employees, you can only take the credit on the people who were not providing services. If you had 100 or less employees in 2019, full-time employees, then the qualified wages are everyone. It doesn't matter if they were at home not providing services or if they were working. All the wages that you pay, you can take 50% of and take the employee retention credit up to $10,000 per each individual. All right? I hope I didn't lose anybody, but if you did, make sure you put the questions down below. Okay, PPP or ERC. I'm sure you've heard a lot about the PPP program out there, Paycheck Protection Program. Both of these things are designed with the same purpose in mind. We're trying to retain employees. We're trying to keep people off of unemployment. We're trying to have people getting paid so that the economy doesn't suffer so much more, okay? So we're trying to minimize the damage. So in this case, if you applied for a PPP and you got it and you were granted the program, the loan, you cannot use ERC because you're already paying your payroll with wages that the government is providing you. And they're seeing it as double dipping if you're paying wages with money that's not yours anyway. It was given to you and potentially will be forgiven. And then on that free money, you're also getting 50% of it back. You can't do that, okay? So make sure that you are very aware. If you did apply for PPP, don't try to use both because there will be consequences. What those consequences will be, honestly, nobody has the exact guidance on that yet, but I don't want any kind of consequence if you ask me personally. So, all right. An employer may not receive the employee retention credit if the employer receives PPP loan that is authorized under the CARES Act. The only way that this does not apply, some people had gotten the PPP and realized after more guidance even came out in that area that they should not have gotten it, or that there's something in there. Maybe they couldn't retain their employees. Maybe they realized that they calculated it wrong. The government gave time for people to say, oh my gosh, I got these funds and I know that I wasn't really supposed to get them. So they gave everybody the chance to return the loan, basically, all of the loan money back by May 14th. So if you were one of those that got the PPP but then realized, I probably don't qualify for this, and you just didn't want the risk, or whatever the reason was that you returned the money, if you returned it, then you can go ahead and get the ERC, okay? So, Form 7200, like I said in the beginning, is the form that we use to claim any advance of the ERC, okay? Because there's two ways of actually obtaining the relief and the money. But 7200 is what you use to request anything that's above and beyond your payroll tax liability, which is the first thing that you're gonna use in order to get that money, or keep it in your pocket rather, okay? So we're gonna show you that form. We're gonna show you how to fill it out. It's relatively simple, but I do advise you to contact your CPA, your EA, or your accountant for further guidance. And if you should need assistance, don't hesitate to contact us, okay? Don't do this alone. It's like I said, it's relatively easy, but it's easy to make mistakes. So please seek assistance. And here's our contact information. You can call us at 407-344-1012. Or you can email us at info@freedomtaxfl.com. And our webpage is freedomtaxfl.com. Easy enough. All right. Thank you very much. This is going to conclude the PowerPoint part of this presentation. And we're just going to go ahead and go to the forms so you get a little bit of an idea of what we're looking at. Okay. So for this credit, let's take a look at a payroll summary for the first pay period in April for this company, okay? You're gonna see here that in this week, we had 4 people on payroll, and if you look at their total gross pay, you have a total here of $2,707.52. Okay, so the rule states that 50% of the wages, in this case, these people had less than 100 employees, okay? So 50% of all the wages paid, all the wages are qualified, is going to be the credit amount, okay? So $2,707.52 is the amount of all the wages paid. So if you take half of that, you are going to get $1,353.76. So that is the amount of the credit for this pay period, which is really not that bad at all. That sounds actually pretty great. If we go through and we add up the federal withholding, Medicare, Social Security on the employee side, and the same figures for the employer, we see that the total liability, the 941 liability, would actually total $653.24. So the way that you obtain this credit is, first, you don't pay that liability. Normally, I mean, this is per week. Some people have to make their liability payments weekly, some are monthly, but for the sake of this calculation, if you would pay your liabilities weekly, you would not make that $653.24 payment. Now, we said the credit was 50% of the $2,707, so the credit is $1,353.76. So obviously the credit is more than what you're saving by not paying the $941 payment. So that's where the Form 7200 comes in handy. All right, so let's take a look at it. This is Form 7200 right here. It's pretty basic, as in any other form that you would fill out for the IRS. There's definitely going to be a section here where you have to identify your business. So in this case, we just put our business, Freedomtax Accounting and Multiservices, Inc. You have to put your EIN number, your federal number for the business, okay? And then you put your address, your city, state, zip code. Make sure it's all fully filled out and that it's all accurate, okay? Now, this is going to be for the second quarter already, because this is for the payroll ending April 3rd. So we're going to be clicking off this box here, which I didn't click, but that's where you would look at it. Now, we said in the beginning that this credit actually applies to wages from March 13th on. If you're going to be claiming that section of the first quarter, obviously here you see that there is no first quarter because this was all finalized in the second quarter. But what they want you to do is to go ahead and mark the second quarter box. I know it's counterintuitive, but that's what you click even though you're claiming first quarter wages. But in this example, okay, to avoid confusion, this falls in the second quarter. So after you fill out all of your pertinent information here at the top, it's going to ask you here. All right, it's going to ask you to check the box to indicate which employment tax return you filed for. Look at what you filed last quarter, okay? That would be my best suggestion to you to figure out which one it is that you file. Most commonly, it's going to be the 941. There's going to be some instances where you file a 943 or a 944 or a CT1, but quite honestly, the most common option is 941. But please take a look at your prior quarter's reporting to know for sure, okay? It's going to ask you here on B, Part 1B, is this a new business started on or after January 1st, 2020? In this case, no, but if it is a yes, go ahead and put yes. All right? Now, it's going to ask you here, it says if it's yes, skip line C, because line C is asking what you reported on last quarter's 941, okay? So, if yes, skip line C, unless you've already filed one. But if you haven't, then you can skip it, all right? But it's going to ask you amount reported on line 2 of your most recently filed Form 941, okay? So then we're going to go ahead and take a look at the 941, okay? Right here, this is line 2. Wages, tips, and other compensation. That's the number that they're looking for. So you're going to go ahead and enter that number right here. And it's going to ask you how many employees. Now they ended up, we ended up here with 5 employees at the end of this first quarter. However, there's 4 employees currently there now, so I just put 4. Now we'll go back to the wages. All right, so 2707.52 is the wages. The credit is 50% of the wages, right? So that is what we're going to put here, because Part 2, line 1 is asking total employee retention credit for the quarter, not the wages. Do not put wages. Get the wages, find out the credit, and this is where you put the credit amount, okay? Now, line 2 and 3, for the sake of this video and what we're speaking of, we're going to leave as 0. But this is also where you're going to take into account any sick leave that you have paid or qualified family leave wages, all right? But we're going to go over that in a separate video. So for now, we're just going to leave those at 0 and focus on the ERC, all right? So it's going to say here, add lines 1, 2, and 3. Line 1 was the calculation, 2 and 3 is 0, so that's easy. You just drop that total here. Line 5 asks you total amount by which you have already reduced your federal employment tax deposit for these credits for this quarter, okay? Now, if we add these amounts, like I said, the withholding, Social Security, Medicare and Social Security, that total amount that we were supposed to pay in 941 payment is $653.24. So that's what we're going to put here, okay? So we've already reduced our deposit by that amount. So of this credit, we're already taking this in not paying the liability, all right? So number 6 says total events credits requested on previous filings of this form for this quarter. Well, this is the first pay period for the second quarter, so 0, no brainer. Line 7 is going to ask you to add these two figures up, and in this case we get $653.24. Advance requested, so we're going to subtract what you've already reduced your deposits by from the entire credit that pay period gives you, and this is the amount extra above and beyond that they owe you, and they call that an advance. So we're going to file this form with this amount, and they're supposed to send you the check in the mail with the amount of the advance. And you can file Form 7200 as many times as you want. You can do it after every pay period if you need to, or you could do it at the end of the quarter, or you could do it once a month. It's up to you, okay? But it is cumulative, and I'm going to show you with the next pay period how you got to be careful if you're going to file more than one, because it is you have to keep account in a cumulative manner for that entire quarter, okay? So that's pretty much it. That's all it takes as far as filling it out. If, for example, for our clients, if we're preparing this for our own clients, we're going to fill this out because we are a third-party designee. You're going to sign it here as the business owner, and you're going to fax this form in. You don't mail it in, which is great, because mailing stuff to the IRS and for them to receive it and process it, it takes forever. And we know that they are swamped with stimulus checks. They're swamped with all the tax season. Tax season is really still running, and the deadline's coming up soon. So the IRS has their hands full. So anything that we can cut some of that time away from having to wait is going to be great. So here's the number that you're going to fax this form into, and they're supposed to mail you the check. And it's supposed to be relatively quickly. So we'll see how that goes. They still haven't processed these payments yet, even for the first quarter, but hopefully once they start, with the first ones, it's just gonna turn into a well-oiled machine, and then the other ones subsequently will come out after that. All right, so there's your example with the first pay period in April. Now, let's look at the second pay period in April. All right, we have the same 4 employees, and we have very similar wages to that first pay period, okay? So here's where it gets a little bit tricky, and I'm going to try to show you as best as I can here on the screen. So here we had the one that we initially did. Now you're going to fill out another form, okay? And by the way, you get Form 7200, you could Google it, Form 7200 PDF, and you'll be able to print it out right off. It's probably going to link you to the irs.gov website, and you'll be able to print it out and fill it out for yourself, okay? So here's the one that we are going to do for this second pay period. So pay period April 4th through April 10th. Now, please protect yourself against yourself. Right on this one, do not file and rough draft, because this is going to help you fill out the one that you're actually going to be sending, and you'll see why in just a second. Top stays the same. You fill out all your pertinent information, make sure that you don't have any mistakes. You're still going to click on the second quarter, okay? When you get to the middle, again, repetitive. Form 941, most likely, but please check your prior filing. Again, if it wasn't a new business, then you continue to click no, and the prior quarter still remains the first quarter, so that number from the 941, again, we'll take a look at it, is going to be line 2 from the most recently filed 941, in this case is first quarter of 2020. Okay? All right, so we'll go back to this rough draft here. Total employee retention credit for the quarter. We're not going to do total yet, okay? We're just going to do it based on this pay period. So if we look at the 2707.52 and take 50% of that, we're going to put that amount here. just like we did the first time, okay? Again, for the sake of this video, we're not going to talk about these other credits, so we're just going to leave them as 0. So the total, again, drops down to line 4. It's going to ask you total amount by which you have already reduced your federal employment tax deposit. Again, because the payroll is really similar, this payment is very similar to the first one that we did. The liability for this pay period is going to be $653.28. All right. Now here it says total advance credits requested on previous filings of this form for this quarter. So we've already filed one, okay? So we're going to go back to that first one. And you're going to see that on this one, we requested an advance of $700.52. So that number is going to go here because you've already filed for that. Okay, so line 7, we're adding the total of these two up. All right, so that addition is going to give you, I didn't add it up beforehand. Here we go. We're going to take a calculator and add $653.28 plus $700.52, $1,353.80. Okay, so that's the number that you're going to put here. Okay, but not on this one because this is just a rough draft. I guess that's my cue to pull up the actual form that we're going to fill out. Okay, we've already filled this one. Now the purpose of filling this one out is just to isolate this particular pay period. But when you fill out the actual form that we're going to send in for this pay period, you're going to have to add, because this is cumulative, you're going to have to add what you had in the first pay period, the second pay period, and the totals go here. Okay, so if we take a look at this, scoot this over a little bit, we have the $1,353.76 from the first filing plus $1,351.26 of this pay period. So the total so far this quarter is $2,705.02 in credit. These zeros remain the same because 0 plus 0 is 0, and we're going to add up line 4. The total of the line 4s go here as well. So total amounts by which you have already reduced the deposits, it's going to count. You've already reduced it the first time for this amount, the second time for this amount, and you're going to put that total here, $1,306.52. All right? And this is the advance that you asked for on the first filing for this quarter. So now we're adding the two 941 payments that you have saved, you've not had to make, so that money is in your account, plus the advance from the first filing. So the total between those two is $2,704. You're going to subtract it from the full credit so far to date, and this is how much they owe you for the second pay period. And this you would do every time you file it for that quarter. When the next quarter starts, you start brand new over here with the zeros like you had nothing accumulated because it starts brand new. Okay, so that's pretty much how this works. Now with the third pay period, you're going to have to do another one of these rough drafts for that third, and you're going to add first, second, third, and then get a brand new 7,200 and go ahead and just put all the totals there again. Okay, oops, I went off to the wrong window. So hopefully this makes sense. It's pretty simple once you get the hang of it. But like I said, if you need any further guidance, do not hesitate in contacting us and letting us know. We'd be more than happy to help you. Again, our phone number is 407-344-1012. And you can call us Monday through Friday, 9 a.m. to 5 p.m. Or you can send an email at any time, and as soon as we get that, we'll go ahead and make contact, and we'll try to help you out as best as we can. All right, so I hope you enjoyed this video. If you enjoyed it, if you found it informative, if it helped you kind of navigate all this, give it a thumbs up for us if you could, please. And we're going to be releasing a lot of videos, and we have already. If you want to keep in touch, if you want to keep up to date on the latest news, on the latest laws, on the latest credits, hit the notification bell and it'll let you know when we post a new one. Okay, so thanks for watching. Thanks for sticking through this whole video to the end. Thank you for being so gracious. We are not bloggers. We are just trying to help you guys navigate all these ever-changing rules that are coming out now, and we hope that this is going to be something that's going to bless you and help you in this time that we understand that it's a very trying financial time. So be safe, stay healthy, and we'll see you on the next video. Bye-bye.